Morning traders. Markets appear to have settled a little after the PBOC assured traders yesterday that the three-day move we've seen this week in the onshore RMB fixing rate was not the start of some massive move towards further weakness. Whether you believe them or not is a moot point, because really the fact the PBOC governor said the devaluation pressure of around 3% had eased with the move means that the near-term pressure for it to get weaker seems to have abated a little bit. Certainly this morning we've got the CNY rate after last night's close at 6.398. That's down from yesterday's fixing rate. That's a good sign for markets, and it's one that certainly helped buoy sentiment. But it didn't help that much, which tells you that there's something underlying going on in stock markets at the moment. It's not fear of the Fed, because expectations about Fed hikes in September are still in the 40-45% region on Fed funds. Not quite sure what it is, but from a technical point of view, many of the markets look terrible. The German DAX bounced off the 200-day moving average the other night. It still had a down day, and then last night it started off strongly, but then weakened towards the close. So it looks like it's still under a little bit of pressure. Of course, we've seen the death cross in the Dow. And the ASX 200 has broken down through a major trend line stretching back to 2012 and looks like it might actually be in a little short-term trend line since the highs back at 6,000. So US bonds drifted a little bit higher as well. That was mainly on the back of the fact that jobless claims came in very strong. 274,000 print for the week, but the 4-week moving average has dropped down to 266.50. That's a 15-week low. It's a bit of a statistical quirk because we had that 23 or 22-year low in jobless claims a few weeks back, so that'll wash out. But it's still a sign that the US jobs market is still strong, as we saw with non-farm payrolls. Likewise, retail sales rose 0.6. Last night, as expected by the market. That was pretty bang on expectations. If it hadn't been for the China devaluation this week, we wouldn't be talking about the if of September, we'd be talking about it as a certainty. That's really interesting. That causes a little bit of tension in markets as well, because it still could be that the Fed hikes at a time when traders think perhaps it shouldn't. That gives us a pressure point for markets. On currency markets, the Aussie failed at my slow-moving average yesterday. That's the fourth time in 5 days it tried it, and it's failed again. So the pressure's still on the Aussie. I don't have a trade on the Aussie at the moment. It's going nowhere. The CAD and the Kiwi got hit. The CAD moved a big figure, and that was largely because oil got crushed again last night. It's at 42.23 this morning, off about 2.5%. It's terrible. It looks like it's broken a very long-term trend line going back to 1999. That's where the deflationary pulse for the globe is going to come from. It's not going to come from China. It could, but right here and now, the clear and present danger for the ECB, for the Bank of Japan, and to a certain extent for the Fed's desire to get inflation back above 2% is coming from crude oil and the continued crash. So anyway, gold failed at resistance as well. And so it sets up an interesting close to the week and another big week in markets next week, even though we don't have a lot of data flow. Anyway, to the overnight scoreboard. Dow Jones was roughly flat at 17,408. The Nasdaq fell 0.21% to 5033. S&P was down 0.13 to 2083. In London, the FTSE was flat at 6568. DAX only managed to pick up 0.82% of the almost 3% loss the night before. The Nikkei was up 1% in trade yesterday in Tokyo. Shanghai was up 1.76, a decent run into the close, but it really is marching to the beat of its own drum. Hang Seng was up 0.43%. The ASX SPI 200 futures are down 5. On currency markets, the Aussie is 73.56.57 at the moment. Euro 111.50, dollar yen 124.40. Dollar CAD 130.58. Crude, as I said, is in the low 42 regions. Gold at 111.14, having fallen back away from the previous support zone. So that still puts the downward pressure in a medium-term basis on gold. That's it for me today. Have a happy Friday. Have a great weekend. Stay safe, and I'll see you all again on Monday. I'm Greg McKenna. Thanks for watching.